What is a credit score? A credit score quantifies the creditworthiness of an individual, with a higher score meaning a better credit rating. Why is having a good credit score important? Having a good credit score could make the difference between having a slightly better rate on your mortgage, lower insurance premiums, or lower interest rates on loans, for example. You really shouldn't ignore it, as doing so could really come back to bite you. So there are three main providers for credit scores out there: Equifax, TransUnion, and Experian. Equifax has a score from 0 to 700. TransUnion has a score from 0 to 710, and Equifax has a score from 0 to 999, where the higher the number, the better the credit score. So there are several factors which contribute to your credit score. So for example, having direct debits where you pay on time, withdrawing cash from credit card linked accounts, outstanding debt, being registered to vote, and ongoing legal action. So for example, any county court judgments or filing for bankruptcy in more extreme cases. So the process for taking into account all of these inputs and churning out a credit score is quite an opaque process. But what I'm going to do in this video is outline what I've done and how my credit score has improved over the last 6 months. So given my interest in personal finance and investing, I've always saved from quite a young age, and by the age of 27, I'd never had a credit card. I only had used my overdraft facility when I was a student, when I had no money. So I didn't really have any extensive experience of borrowing. The fact that I'd managed to get this far without relying on credit cards made me think that I had a good credit score. And that sounds pretty feasible, right? You know, I wasn't borrowing irresponsibly. But around 6 months ago, in November 2023, I noticed that my bank had a function on their app to allow you to check what your credit score was at the click of a button. So that's what I did. And here is what the report said. So it was provided by TransUnion, so the score out of 710 points. And I had 613 out of 710, which is a good credit score. Only a good score. This wasn't in line with my expectations. Why wasn't it excellent? I always pay my rent and my utilities on time. I never go overdrawn. I earn a decent amount of money. I think it was around 55k per annum at the time. So I really set about trying to improve this, and the rest of this video is going to cover these 3 steps in more detail. Okay, so before we dive in, just a couple of disclaimers. Whenever you decide to take out any form of debt, it's important that you have an established and clear repayment plan. The idea of borrowing money that you can't afford to pay off in the next few months can be a slippery slope, because debt that remains outstanding for a long period of time has high rates of interest attached to it, and so compound interest can work against you. If you, or anyone you know for that matter, is suffering with debt, a really good place to start is the Citizens Advice Bureau, which have some sort of free, impartial guidance on there. With that out of the way, I'll get into it now. So step 1 out of 3, get a credit card. I decided to get an Amex cashback everyday credit card. The reason for taking out this card was quite unsophisticated, really. So first of all, it's free. Woo-hoo! Second of all, it's a reputable brand in the sense that my friends and family use Amex products and I haven't heard anything bad about them. And finally, you get cashback, so 0.5% per annum on any spending. Since I got the credit card in November 2023, I've received £50 cashback. So I use my Amex card for 3 main things, really. So groceries, travel, and holidays. So step 2 of 3, which is really important, is to set up a direct debit where you automatically pay off the outstanding balance on your credit card on the same day each month. It is possible to delay making repayments or making ad hoc payments, but I am careful there, as accumulating debt on your credit card can be negative for your credit rating. So at the moment, I have a £6,000 credit card limit, but I've yet to use more than £1,000 of the limit within any given month. So I'm way within my limits, and I have no intention of increasing that limit anytime soon. Step 3 out of 3, the final step, is to make sure that the address that is registered to your bank accounts reconciles with the address that the electoral roll have for you. So for those of you that don't know, the electoral roll is simply a register of people in the UK that are eligible to vote. And the electoral roll is used within credit applications, so it allows a third party to help verify that you are who you say you are. So when the electoral roll address and your bank address match, that is potentially good for your credit score, and it can improve it. If you're not sure where you are registered to vote, you can go on a government website to help you. I will leave that in the comments down below. So how did my credit score improve over the first 6 months of getting a credit card and doing those other steps that I mentioned? So firstly, TransUnion, that increased to 630 out of 710 points, which is an excellent credit rating. So you'll see on the screenshot there that they provide additional tips for further increasing my credit score. And one thing is that they say that I could take out another credit card to help improve the score, but then they say that there's a chance that it might go down temporarily, which sounds kind of weird to me, but I'm not going to take their advice. I'm just going to carry on with just the one credit card. I don't like the idea of just taking out more than one line of credit when I don't need it, so think carefully if you're looking to do that. Yeah, this sounds pretty silly to me. I don't understand why you'd have to take out multiple credit cards to have a better credit rating. Surely the idea of demonstrating sensible, right-sized borrowing habits over time with a scheduled repayment plan is better, but I mean, I'll leave that to the banks and building societies of this world. Okay, so TransUnion had an excellent credit rating, that's fine. But what about other providers? So I looked at Experian, which is the rating of up to 999, and my most recent score was 666 out of 999. Quite hellish, really. And this is technically ranked as subprime. It's just under the threshold of being better quality. Being categorized as a subprime borrower could mean that I have difficulty in securing further lines of credit. But on a positive note, my score has increased by around 240 points according to the Experian methodology since November last year. So the direction of travel is in the right direction. Okay, so let's just wrap up this video now. What are the sort of key conclusions and next steps? So firstly, it's clear that taking out a credit card and demonstrating sensible borrowing habits and a timely repayment plan can be really beneficial for your credit rating, and that's what I've experienced, at least according to the TransUnion methodology. You don't need years and years and years of credit history to build a good credit rating. I've made substantial progress in only 6 months, so it's important to bear that in mind and just start making the decisions today to help yourself in the future. Another key conclusion is that the different models of credit scoring, so the different black boxes if you like, they can lead to very different numbers. So I had an excellent rating with TransUnion, but then a subprime rating with Experian, and you'd have thought that everyone has access to the same information. What I'd suggest is to look and see what your credit rating is across a different number of providers, and this will allow you to hopefully get a more representative view of what your current credit score is. But overall, building a credit score is not rocket science. If I can, then you certainly can too. And with that, I'll end the video. Thanks very much for watching. If you enjoyed the video, please leave a like and subscribe. It'll help the channel and help me on my journey as well. So thank you and take care. Cheers.